This is Scott Becker with the Becker Private Equity and Business Podcast. We're joined today by one of our most listened to guests, the brilliant Matt Wolf from RSM. And Matt's going to talk to us today about the IPO market and what people are expecting there, and why that's also provided some opportunities for private equity funds for exits and for more. Matt, let me tee it up and ask you to take it away. What are you seeing out there? What are you watching?
Yeah, thanks, Scott. With respect to the IPO market, we think, as do others, that 2025 could be a pretty good year. We're on the other side of some macroeconomic and election uncertainty. Not There's not zero uncertainty, of course, but we're on the other side of a lot of that. And as long as sort of equity valuations, particularly in the U.S. market, holds, which we don't necessarily have a position on, but a lot of other banks and observers, I read their research and they, calling for a good year in overall equity markets, at least in the US, right, as we continue to receive capital flows from other countries. That'll create great conditions for public offerings, particularly, we're also looking particularly private equity backed companies to go and access capital. And I know we've had lots of conversations with our clients around this. The data suggests that it could be a good year for that as well. And yeah, so looking forward to that and excited about that. I think the other note, though, is we expect to see a lot more announcements and a lot of good listings next year, but it's going to look different, right? We're going to see more, like maybe not boring isn't the right word, but tried and true, more mature companies going to market, right? We're done, not completely, but past the days of the recent unicorn tech IPO raising an absurd amount of money. We might see some of those, but a lot of the companies that I expect we're going to see announced and list will be, like we saw KinderCare, right? They listed, they had a successful IPO. It'll be companies like that, right? They have a lot of employees, large market share, solid growth, solid cash flow, solid profitability. Those are the kinds of companies we expect to see list an IPO, and we expect to see quite a few of them over the next 12 months.
100%. And you're also seeing in some tech stocks too. I saw Astera Labs recently went public. There's talk about Bitcoin, Klarna going public. So there is a Bitcoin technology company. So it's really a mix out there, isn't it?
Absolutely, and yeah, we'll certainly see activity in the tech sector, and but, we will see some of those maybe lower profitability, more aspirational type IPOs, certainly. And we are also seeing, and we expect we'll see some mature technology companies. I mean, really, regardless of the industry, what we're hearing from, the investors that want to, take it public, right? You think about the typical roadshow, right? So the institutional investors that buy those initially offered shares, they want that growth story. They want profitability. They want proven success, proven operations, almost regardless of the industry. So we'll see them in tech, we'll see them in healthcare, we'll see them in CPG and other spaces. But with certainly some exceptions, all these companies are going to need that solid growth story and profitability story as well, which just wasn't a requirement a few years ago.
Yeah, 100%. No, absolutely fascinating, fascinating. And what else are you folks watching closely at? People are at the end of the rope on some of these funds that they've been in for a long time, but suddenly exit opportunities look pretty encouraging. Do you have a lot of people talking about recap versus exit, or how do you think about that?
Yeah, absolutely. And how do we, provide liquidity to existing LPs and still maintain this investment so that we can better time either the market, or what we're really seeing a lot of is some sort of recap, minor buyout, provide some liquidity, whether it is a recap, NAV loan, whatever that is, to buy time to just frankly improve operations of the company, whether the exit path is IPO or not. Just saying, look, if we waited for the market to try to return, it didn't return in the way that we thought it would. Now we have a plan. Again, we're on the other side of some market uncertainty. We have a plan to make these three investments in the company, maybe new technologies or whatever that might look like, to really improve the operations. And then 12 months from now, we'll be able in a position to successfully exit, but 12 months or 24 months. But if you want some liquidity now, we'll provide it to you in this way. And we've seen, more and more of those sorts of financing arrangements, which is always interesting. But definitely there's been a broad acknowledgement that we need to provide liquidity. But I think also the sponsors kind of also recognize that, hey, it's, we're maybe in a lot of these portcos maybe a year out from a really good exit, so we're maybe gaining a little bit more patience.
Right, and that's a fascinating word because the patience, there's so much pent up demand for some liquidity, and funds that are raising funds are so much looking to put some positive wins on the board for their fundraising, but at the same time that trying to stay patient for the best possible exit and time it versus de-risking and taking some money off the table.
Yeah, and that's a great way to outline that calculus, and it's going to look different for every portfolio company, every different group of LPs, and I think it just speaks to the sort of broader challenges, or maybe not even challenges, but the broader shift in private equity investing that we've been talking about for the last year and a half. Is It's all just going to have to be so much more customized going forward, right? The deal, the idea, the fundraising can't just be, oh, well, we're going to do build and buy in a handful of industries, or platform tuck-in acquisitions, and we have a history of making you money, so we'll make you money going forward. Like, I really think that the most successful sponsors going forward will very carefully cultivate those LP relationships, make sure they're all as like-minded as possible, and focus very specifically on certain industries and sectors, and sort of create these very customized investment vehicles, at least in the middle market, where sponsors don't have the same resources as some of the large global players.
No, they're thoroughly fascinating. And we're watching this up close and personal. A lot of places, this recap versus exit perspective, trying to find the right offer that's exciting enough versus having the alternative so you're not held hostage by the buyer of having a recap scenario. And I find that discussion just absolutely fascinating. And it is. It's not necessarily changing the ultimate outcome, but it takes some of the risk off the table in the current scenario, but it adds on debt to do so. And there's a great Wall Street article last week about how many private equity funds are leveraging up on debt versus doing true exits, and that's fascinating too.
Yeah, I mean, I saw that same article, and obviously it all is facts and circumstances based. I guess if there's, I can't think of, maybe I work with different firms or something. I can't think of a ton of portfolio companies that can take on significant extra leverage. But again, depending on how it's all organized, and if it's really equity, but we call it debt, different financing arrangements can look different, and it all has to be customized, I think, to the situation. But I saw that same article and thought that was almost felt like a reversal of the sort of financing trends that we had seen over the past year, and
No, it really did.
deleveraging.
But you particularly as you see sort of I think the interest rate stabilize some, and people feel more comfortable that they could do that and not, put themselves in a horrible spot. But I found it to be absolutely fascinating, and how some of it's been overdone, of course, again, and it's a constant balance as a company, a sponsor portfolio company, or a sponsor to hit that number down the middle where you don't put so much stress on management, but you further de-risk the company or take some money, off the table. It's a fascinating balance, I find.
Yeah, and that's the other critical piece of this component. We've talked about the financing environment, we've talked about the LPs, we've talked about sort of macro trends, and then all of that sort of the very middle of that vortex is that management team, and they've been important in the past. And that's another, back kind of full circle to our IPO consideration, right? You want to go public, you need an absolute knockout management team, and that's going to make the difference. It was important before. It's going to only be more important going forward as all companies and sponsors navigate the new risks and the sort of changing macroeconomic regime where, yeah, you can take on leverage, but you really need to show that ROI and it needs to make sense, and there needs to be a growth and a profitability story, and the management team is the absolute key and center of that whole maelstrom.
100%. And again, as we always talk about, leadership matters, and the right leader and the right leadership team is so important to success. We could not agree more. Matt, I'm going to let you go. Thank you for joining us as always on the Becker Private Equity and Business Podcast. You're literally remarkable. Thank you very much for joining us.
Thank you, Scott.